Hello everyone, welcome to my channel once again. So in today's lesson we are going to be discussing support and resistance. And from our previous video on market structure, we saw how market moves in different ways, in the higher highs, higher lows, lower highs and lower lows. And so the market is never static, right? So the next important question to ask and also answer would be, where then do I get my entries from? Where then does price now react from? How do I know where price should react from? And that is what this video is currently about. So we're going to be discussing support and resistance as one of the ways to identify places that is probable for markets to react from. So right down into it. What is support? Support is basically just the same way we use the English word in everyday life. Support means, someone is trying to help you, right? Someone is trying to help you, and you can see it like probably you're down here. Let me give an example. So probably in your business or whatever, you are down at this point, and the sun is trying to support you up to your goal, which should be, you're aiming higher, right? And then what then would be resistance? Resistance then would be, you're trying to get something done, you're trying to do something, but there seems to be a push downward, right? So probably government policy. I'm talking about business owners now. Probably government policy, probably, there's just something trying to push your business downward. You're trying to break through a particular point, right? But there always, when you get a particular point in your breakthrough level, there's always something trying to push you down and always keep you down, which shouldn't happen. But that is just basic concept of support and resistance. So support, whenever you're discussing support, talking about going to the upside. When you're discussing resistance, talking about going to the downside. And that's why we have it as green and red, just to help you understand. And what else? That's the basic concept about support and resistance. So in this particular video, rather than treating support as, in every other place where you'll see support as a line in the trend or in the chart, right? I want you to see support as a zone or as an area that there has been buying pressure. This is what I mean. So from our video and our lesson so far, we say market moves in this direction to the upside, right? If we're discussing support, we're talking about when the price is going to the upside. So if support is an area where the price will always tend to buy from, that means when the price gets to that particular area, it tends to get supported and push to the upside. Now look at this. It means if it comes down to this area, we're going to see another push to the upside. Comes down to this area, we're going to see another push. Comes down to this area, we're going to see another push to the upside. Now, in some cases, you could mark this as a support line, right? But it is better if you get to understand support as not just a particular price point, a particular line in price, but rather as a zone, or what I'll call area, right? So rather than as a line, rather I'll call it a zone or an area where price will definitely come back to react from. So let's name it support area or support zone. Yeah, so support area. Now, like we said, for resistance, you're always going to the downside, right? So that means the resistance also will take the same form, just in the opposite direction. So it will be an area where price is always pushing down to downside. And how do you identify this? Actually, we're going to get to that in a few minutes. Usually once that has happened about 2 to 3 times, that place is a very, very strong resistance zone or a resistance area. And I'll explain how this works, or what does this imply to us as traders. Usually what this means is that, for instance, on the support area, don't forget, it means where the buying pressure has previously appeared. So that means the market probably got to this point, went to the upside, came back to this point, and then was supported up to the upside again. So that means at these two levels, right, the market has been supported, the buying pressure has happened and has reacted twice. Now to the next time the price is getting to that point, traders are already active to know that place is a very strong support level, and so market is most likely going to get to that point again and then push to the upside. Now if this happens about 2 to 3 times, then it becomes a very strong area. But there's also a caveat that you should also watch out, because in some other cases, that's why you don't trade any, what's it called now, you don't trade any conflation or any market strategy in isolation. We'll get to that in other topics. That means you don't just take support and resistance. There are other things to also consider. But under support and resistance only, right? Once it has reacted once, twice, and 3 times, it's a very strong area. And usually on the 3rd time, you should take your trade either on the 3rd time, or you can risk on the 4th time. But I wouldn't advise you to do it on the 5th time, because that place might eventually turn out to be something else, which we're going to get to. Same thing on the resistance area. On the resistance area, the market reacted on this place, or push down. 2nd time. The 3rd time would be a charm where you can take your trade and use other confluences, probably any other thing, then push the market down to the downside. It could also happen on the 4th time, but usually on the 5th time, there's usually what we call a breakout, which is what I'm going to be getting into now. A breakout. And this is what a breakout looks like. On the support level, you know what support is already. On support level, a breakout is usually like this. Market, is going to the upside, comes back to that point. It doesn't necessarily have to be at that line, but in just that area, just that zone, comes back to that area, push to the upside, comes back to that area as well, push to the upside again. Now it does that about 4 times, right? The 5th time usually, in certain cases, can be a breakout. That means it breaks this low. In our previous video, we mentioned that something like that. It breaks this low, and then now uses the support area as a resistance area. I'm sure you shouldn't be confused, and this is what I mean. So let's see. Could use your trend line tool. We've also spoken about this in certain videos on how to use your tools. That is the line. Or you could also use your rectangle tool to draw the area. There are different tools that you could use just to mark this out. Just do what works best for you. Certain traders even use, I'll get to this later, the parallel channel. So now, it reacted the 1st time, came back, reacted the 2nd time, the buy pressure reacted the 3rd time, the 4th time. But if it breaks it out like this, it means that this support area has been overused and could not hold. And many times it returns back to be what we call the resistance area. Just returns back to be something like this. Do you understand? And some will tag this area as a breakout block. I have different names. But if you understand your support and resistance, you don't need the name, you just need to know how it works. Now same thing would work for the breakout on the resistance level. So on the resistance level, we have something like this, to be reacting in that same zone, creating lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. Many times when the market is about to, some people call it a COCH, when the market is about to change structure, it then comes back to this area, and instead of giving you the same reaction, it breaks out. Now once it breaks out like this, and you see a breakout like this in market, many times usually the market comes back to this resistance area and uses it as a support level. Comes back to this resistance area and uses it as a support level to push to the upside. And this is why we said market is never static. Do you understand? Market is always moving. There's always a movement here and there. There's always there's always price movement. And that is the way trading works. That's the way market basically moves. There's always something to to trade with. And this basically how support and resistance work. The area where the buying pressure is usually active every time it gets to that point is the support. And the area where the sellers are usually active every time it gets to that point is the resistance area. Now also, how then do I, let me move this. How then do I identify such areas when I see them on my, how then do I identify the resistance area and the support area? And the first thing to identify on how to identify these areas is that you have to watch out for your swing highs and your swing lows. If you've been following my video, you should have an idea of what that is now. Your swing highs and your swing lows. Now, what's a swing high? Just for the sake of this video, a swing high is when the market in a particular time frame does a full market movement to either side. Now, for the support area, for the buying swing high, the market starts at this point, goes to this point, gets to this point, and then comes back to this point. Now, at this point, right, at this particular point here, it has gone to this high and has created this new low. So it has created a new high and a new low. That is a full swing. So a full swing is when there's a creation of a new high and a new low on any time frame. So on this time frame, there's a full swing here, there's a high here and a low here. That's a full swing. Now when the market goes back to this point and creates a new high and then probably comes back here to create a new low, that's another swing, right? Because it's a new high and a new low. When it goes back to create a new high and a new low, it's another swing. So the first way to identify your support and resistance levels are, you watch out for your swing highs, your swing highs and your swing lows. Watch out for your swing highs and your swing lows. And when it gets to those swing highs and swing lows, if there are multiple rejections, that's another way to watch out. There are multiple rejections or multiple buys from that particular area. You know that, okay, this is a level or an area to draw my support area. Like I said, do not rush into trades. Good traders don't just trade one confluence or one bias in isolation. But actually, it's one of the ICT concepts that actually works. Do you get what I'm saying? So if you have a swing high here, and that swing high here, and that swing high here, so you are by the third one, you're looking out for this area to see market come down to this point and then give you a bullish, bias and bullish movement. Do you get? Same thing also works for the resistance, area. So on the resistance area, you're looking for your swing high, your swing low, or your high or your low, then another high and another low to form another swing, another high and another low. So you're seeing strong rejections from that particular area, and it tells you that market is most likely on the fourth time gonna come to this area. It's not gonna come to this area and then give me a sell opportunity. So you're looking at for when market comes to this area, probably we'll get to liquidity in some other videos, comes to that area and then gives you a sell opportunity, right? And that is how we identify support and resistance on our charts or in trading. Do you get? So I already mentioned breakout blocks, right? Breakout blocks is when the market changes direction. That is, probably you're having a support level so far, a support level, and then all of a sudden it just breaks all the support level. Now you're about to have this support level to be used as your as your resistance. Do you get what I'm saying? You're about to have the support level to be used as a resistance. We're going to go into the chart now to see how it actually works. We're going to have support level to be used as a resistance, and that's how it basically works. So you can look through this screen much more and be able to see how it works. So let's go right into the chart. And okay, I also didn't mention something which we're going to see in the chart right now. So in your support and resistance level, it could work horizontally like this, where the price movement is just let me do this, where the price movement is just, and the tips, or the tops rather, are just reacting off the levels horizontally. That means we have your high, your low, that's a support, and then another high, another low, another high, another low, something like maybe a range, so just something like around this. All right, so this basically becomes your support. Now this could probably be a buy, be another buy. So let me just delete this and delete this as well, so I could have a clear screen and see. So you could have this as your support where there's a particular line where the market always gets to and then react. And we could also have it diagonally, whereas it's not a line, or it's not an horizontal line rather, but it's in a diagonal form, or you can call it a parallel form, and that's why I have my parallel channel there, which is what I'm going to draw now. So you could have that horizontally, right? You could also have a parallel channel. You can also use your trend line tool for this, but I just like to use this guy because it could give me where price is going to give me a resistance from, which we're going to get to now. So it could also be diagonal like this, where there's a particular point where price reacted from this point, then came back here, reacted from it again, came back here, reacted from it again. So it's done 3 times. I could be saying, based on other conferences as well, market is most likely going to come back here, and on the diagonal side again give me another bullish. What's wrong with you? Give me another bullish movement. That's what I want to draw. Yeah. So that's what this my tool actually is for. So it doesn't have to necessarily touch the end point. It just has to be in the area. That's why you don't just trade it in isolation. You check other things that also gives you your confidence and your bias, which we're going to get in these lessons. So but on this particular day we are talking about support and resistance area, and so we have this diagonally. Now we could also have it in our resistance form. Could have it in our resistance form, or where instead of you could have something like this. You see market going, in some cases it can be very, very horizontal, where it's just at that point. Whenever market gets to that point, sellers get active, there's a buy pressure, right? It gets to that point again, there's another buy pressure, gets to that point again, there's another buy pressure, right? Now usually it doesn't always work like this, that to be at that point. It could actually, but it doesn't always work like this. Usually it can be diagonal, something like this, where you have a diagonal movement. Like this to the downside, right? Yeah, to the downside, something like a parallel line can be drawn. And like I said, you could use your trend line tool or that parallel channel. If you check our videos on tools, identify this. So you could use your trend line tool and just draw something like this. So to be going to the downside. So like I said, because it's an area, not necessarily a point, you could mark it out like this. So this is where I would use this guy here. Do you see? So if I want to know, the exact point to touch back, I can bring it all the way down here, but I could also leave it like this. So whenever market gets to this, so on the third point, when I said okay, market has gotten to this the third time, that means that is a very strong resistance area. I could mark out this fourth one as where I want to sell from, probably at this midpoint, or any other thing I analyze with the confluence, and then I put my sell tool, and then I short the market. Do you get? So those are the ways that, or that's all that there is about support and resistance. Let's go right into the chart and let me show you examples in the chart. So currently we're on the 1 hour time frame and we're on the BTC chart, and then I just want to show you a few ones right here. So right now, look at this particular point, and don't forget we're talking about swing high and swing lows, right? When there's a new high and a new low created. So look at this particular point. Let's start from here. Market came, this is definitely an imbalance. Could use this place as an imbalance, but see, market created a high here, came all the way from down here, created this high, give us this low. Now what did it do again? That same area, give us another high, another low, another high, another low, another high, another low. Market is just joking around, but came back to that same area again, and then give us another high, call this a low, another high, another low, right? If you check again, it came back all the way to this point. If you go around, play around, play around, play around, but if you've marked out that place already, probably also you've seen, like I said, another reason why I should take that trade from the higher time frame. Look at what it did again, came back from that place and then give us another low. So what kind of area would this be? Look at it again, give us another low. So what kind of area would this be? This would be obviously resistance. Why? Because from that point it keeps pushing to the downside, right? Now at this point, what did it do? It broke. It broke, but this time around it did not use the resistance as support. It doesn't always have to happen. It happens at certain times, it doesn't always have to happen. So do you get? That's the way it works. That's it basically works. And that's, this is now on the horizontal side. So another thing you should also watch out for is the higher time frame bias. So on the higher time frame levels, markets carry more significance, structure and significant confluence, because on the higher time frame they represent a visible and a clear overall structure. That's on the higher time frame. I'm on the 1 hour time frame, which is not necessarily bad, but if you go on the 4 hour time frame, I may not do that in this video. I may just show you through that on the 4 hour time frame to show you a clear structure as to why market came back to this particular point and then give us a resistance level again. And let's see it on the diagonal side. I have this place marked out. I said diagonally we could have, now on this diagonal one, this is support, right? Remember what support is? It's pushing to the upside. So let's see. Support, market came from this top, bought from me again, came to this same area, right? Bought a little bit. You can see it didn't come to this area fully. It's fine. You could mark it out. You might not take the trade. You didn't get that area. Bought to the upside again. Now, I've not taught break of structures, but there was something that happened here that I'll get to in other lessons. Now, came back to that area as well, and then what? Came back to that area and bought again. I think they still on that point where it came back to. Okay, yeah, this now explains what I explained as the breakout block. Now look at it. Came back to this area. Came back there. Now it came back to our area that we've marked out. But then this time around, it broke. That means the support level did not hold again. Now look at how many times it has reacted to our support level. How many times has that been? That been 1, 2, 3. If you counted this to be 4, but let's leave it out. It will be 1, 2, 3. Now I did that 3 times, right? Came back on the 4th time, tried to hold, but then sellers got involved and active in the market, and they sold. Now when the moment sellers sold back to this point, what did the support level become? When it came back up, it became a resistance level. Look at what it did. It became a resistance level where you now start finding shots. That means this particular level now became a resistance level. Let's see if it actually panned out. Kind of did, but not exactly. Look at this point. Came back to this point. That is, okay, let me quit this now. So do you understand what happened there? Or is it the support levels, but this is on the diagonal side, right? I saw that market came back here, went up, came back the second time, went up. If I was smart, I would have taken it probably on the 3rd time, considering these places which we can call liquidity. You might not understand that now, and then bought to the upside again, right? Now when market got to that point on the 4th time, buyers could not push the market to the upside. And then sellers got active and then sold, and they start selling aggressively. Now that point now became a resistance area. This point became a resistance area for sellers to get involved. And sellers got involved and then sold. You could also say, like I said, market doesn't move in one direction, and so that's where it went. So you don't have to necessarily, disorganize your chart like this with trend lines and marks and all that. You could if it works for you, but just know that, for instance, look at this time around, I used line. I could also use this tool. You also see me use the rectangle tool, right? So just use what makes your chart looks clean, and then what you can easily identify. There aren't no standard tool to use rather like that. Now let's look at this guy also. And this guy, we have support and resistance level. I'll most likely use the support. And look at the support. Market came. Let me enlarge this a little bit so that you can see it clearly. Alright, so on this support, market came to this point. From this particular high, market reacted off this point, give us this low, give us movement. What's the next swing high where it creates a new high? Say this one, give us a new low. Now it has reacted off a level twice diagonally, right? Now off the resistance level twice. You see how we can combine resistance and support together. Give us a new low and a new high. All this one is just internal movement. Alright, internal movement. Okay, see this particular low, this particular high. I wouldn't take all this one serious though, because it's not an actual swing. This is another swing, right? Then towards the support level, how many times now? We can see the third time. Resistance level also we can see strongly this is the first, this is the second, and this is the third time. That's strongly though. It did in other areas, but I wouldn't take them so seriously because they're not exactly swings. Now look at it. 3 times now. Market went up, give us this one. Just the 4th time, right? I wouldn't expect this to hold the fifth time. If it does, good. But if it doesn't, I know that it is it's also another row. It's what we call the 5th row. I wouldn't get that now though. Now swing. Another swing movement. Go to the resistance again. And now look at it. We eventually did what? We eventually broke the support. And that was on the 5th time. Do you see? We eventually broke the support from here. When market got to this resistance level, we eventually broke the support from here. Could not hold. And then, what did it do? What did price do? Price broke it. And then came back to this point. Use this support level as a resistance level to push down to the downside. But then, sellers got active again and then continued the trend. So that is the way to combine, support levels, and that's the way to combine support and resistance to identify your levels, to identify where price is most likely going to react from. I think I drew another one here. Alright. Yeah, I drew another one here. So you see markets react. If I go to the higher time frame, it's going to be much more, clearer. It's because of the 1 hour time frame, which is not a necessarily bad time frame, but it's just you have more candles than on the higher time frames. So on the higher time frame, on this particular area, okay, this region might be too large. Let's leave it like this. So on this particular area, right, market came to this point. From this point, give us support. This was the swing. Give us this again, another one. Right. Give us another one. What would I be looking out for? On the 4th time it's going to react to this, it should be a buy. What does market do? Market dances. Does it come back to it? Not really. Oh, came back to somewhere around it, give us a buy, and then look at what we call our breaker blocks or our breaking points, right? Push to the upside. The support area did not hold any longer. And next time market came back to it, we went to the downside. Next time it came back to it again, an aggressive sell, and then become a resistance area. Will it come back to that point? It might. Let me see. It hasn't, but it might actually come back to that point. And when it comes back to that point, I'm expecting market to come back to that point and then go to the downside again. Do you get? So on the last one I'm going to show on this chart will be the current trade I'm currently on. So we have this resistance area. Look at this. Market came to this point, reacted, came to this point and gave to the downside again. You could identify on your own chart. Just go to your chart, identify areas, do back testing. That's how you learn. Do back testing. Look at this point. Market went up from here. Give this went. What's that? Sorry. So market came from this point. Give this push to the upside. Support. Another support to full swing. Another support. Another support. That's 4 times now. A full swing, another support, but then it broke. Right, the moment it breaks, you're looking for resistance, and that's what market is currently reacting to. Resistance. Obviously, this is not just support and resistance trade. I mean, this particular one you can see here, but I should delete it. Let me hide it. When it's support and resistance trade, it also has to do with other confluences that we'll get to. But as you can see, look at this area also. Look at this support area. Market bought from here, got to this place and bought again. You could get to this place and do what again? You could buy again. Do you get? So that's that about support and resistance. And go to your chart, right? Go to your chart, do some back testing. You could use any pair. You could use your coins, your crypto. You could also use your currencies, right? It works on any actually. It works on any, and it also works on stable pairs. I mean, not the ones that just pairs like Euro USD, your JPY pairs, your USD pairs, your crypto pairs. Those are stable coins and stable currencies. So it works on those pairs. Do your back testing. Ensure that you check it out over and over again. See how it works, and then know how to easily spot one when you see a support area or a resistance area, and how to take your trade. You could practice with that, and in our next lesson we're treating more on liquidity, break of structure, and all that, and then we'll find when we had all this together, we'll be able to take good trades and come out with good results, right? Don't forget to subscribe to the channel and also like the video so you can see more videos and could also get to other people. Also subscribe to my Telegram channel where I drop my trades before they actually happen, and then follow me on Twitter as well, where I also drop some interesting and informative content. Do have a wonderful day and a wonderful week ahead. This is the voice of God did, and I say God bless.